Hey everybody, it's Thursday, it means it's time for your Thursday Thought. I shared a video last week with some really, what I thought were some important numbers. A week and a half ago, I was in Orlando over the weekend for the Keller Williams Family Reunion Conference. It's a big conference where all the KW agents get together, and we just kind of learn, we kind of refresh, recharge, see what's going on in the economy on a macro level, see what's going on with the industry on a macro level, and then we learn in breakout classes so we can come back and provide a higher level of service to you, our clients. And so there were three big numbers that I took away from kind of the state of the economy and state of the industry addresses that were made. And I want to recap those real fast and then kind of do a deep dive on the last one. So the first number that I shared was home price appreciation on average over the past 31 years. And so when you look at the average price of a home in 1990 all the way to 2021, and you were to lay about a 4.4, let's just say 4.5% appreciation, you'll see that actually where we were in 1990 and to where we are in 2021, we've actually seen on average 4.5% appreciation. That actually reminds me kind of like the stock market, right? Where right now it's like so volatile, it's up, it's down. The last few months have been really rough, but when you look at the stock market on average and you're able to invest and just consistently invest, you're always going to see those gains, and you really only lose when you sell, right? So it kind of reminds me of that a little bit because we're actually right where we need to be when experiencing that 4.5% appreciation. So that was the number one number that kind of stood out to me. We're not as out of whack as what we think we are is ultimately the point. The second number, and this speaks to kind of our inventory shortage as a nation, looking back at 2009, 2010 in the Great Recession, a lot of builders went out of business, and cumulatively, over the last decade and a half, we have underbuilt in the U.S. About 1 million homes per year. But cumulatively, because we had overbuilt before and we're building now, we're about 2.5 million homes short nationally, which is why you see in a lot of these major metropolitan areas, the Colorado Springs, the Denvers, the places that are in high demand, our inventories are low. The second reason our inventory is low is because sellers aren't selling, because if you want to stay in the same area, sure, you can sell high, but then you have to turn around and buy high. So you're not seeing a lot of horizontal movement. People are moving because they need a bigger house, they need a smaller house, they're moving out of state, and that's the kind of the limited inventory we see, but people aren't making, horizontal transitions here because you can sell high, but you have to buy high. And the third number that I shared last week that I want to share again here is an Affordability Index. So NAR keeps track of the average percentage of a U.S. household's income is going to pay their mortgage. And back in the 80s, when the interest rates were 15, 16, 17%, it was very often 34, 35, 36% of a household's income was going to pay their mortgage. And the average, looking over the past 40 years, is 20.3% of a household's income goes to pay their mortgage. And right now, as a nation, on the average, it's about 17 or 18% of an average household income is going to pay their mortgage. But I had some people reach out to me on this and say, hey, listen, that's not what we're experiencing. It's not what our market's experiencing. In our market, it's more like 35%, even 40% in some instances of our income is going to pay our mortgage. And so I just wanted to say that the numbers that I was sharing last week and just kind of recapped are national averages. So of course there could be some San Francisco, some Denver, some Austins, some places where the market has really exploded and the average income has not kept up with that, and so they could be way out of whack. And then there could be places, Midwest, Carbondale, Indiana, or Athens, Ohio, where it's actually significantly less. Maybe only 6, 7, 8, 9, 10% of your average of your household income going to pay your mortgage payment. And so ultimately, I share that these are the national average numbers. It may not be what we're experiencing here in the Pikes Peak region, but those are the national averages. And so I just wanted to kind of make that clarification. So anyway, hope that you found the information useful and valuable and educational. If you are considering purchasing or selling a home this year, I'd love to be a resource to you. Remember, I can help you here in the Pikes Peak region, really anywhere in the nation and really anywhere in the world. Keller Williams is a huge company. We have partners all over the place. So please reach out if I can be of assistance. Thanks for tuning in to this week's Thursday Thought, And we'll see you next week on next week's Thursday Thought. See ya.